welcome to the weekly outlook. We have got a pretty light calendar next week. In fact, not really a lot going on until the non-farm payrolls on Friday. We've got average hourly earnings, non-farm employment change, and unemployment from the US dollar. Now that is expected to improve apart from the average hourly earnings. Now the non-farm payroll expected to come in at 202, up from 173. We will be listening out to see if there's been any revision to the 173 from last month, and also to see if the figure comes in better than 202. But to be honest, I don't think the non-farm payroll is going to have as much of an effect on the market as what traders might be thinking. Of course, we will see some deviation in price during the non-farm payroll, but I'm fairly confident that it will return back to the pre-announcement prices unless the data really surprises. The reason being for this is because the Fed have made it quite clear that the labour market is improving, which we've seen improvement for quite some time. But they are concerned about global slowdown in growth, i.e. mainly China. So the focus has really switched from employment to this sort of situation now. So no matter what happens, it's not really going to have an effect on interest rates as such. Obviously, if it starts to decline on a regular basis, then it will be pushing rate hikes back. But at the moment, we're still looking at an interest rate hike from the US dollar this year. Now, the data coming in much better than expected obviously will solidify that factor. Data coming in poorer will maybe push it back, but it's not the primary judgment now from the FOMC. So we are looking at some currencies, and we are looking at some currency pairs to trade. Now, the ones that I'm looking to trade is one that I'm already in at the moment. Actually, is the US dollar yen that we took on Friday from the 119.60 area, which is the bottom of here. And I think I painted this one out in the weekly outlook last week. We were looking for this price to push down to this rising trend line, this symmetrical triangle, and then to see a breakout to the top side. We're coming into October. Now in October we've got some monetary policy coming from Japan. Their inflation is slipping. They're not reaching targets. It's looking more and more likely like they will announce the fact that they're going to have to add to their or expand on their QQE program. Now if that happens, then obviously we're getting that divergence between the two central banks, between the US Fed and obviously the BOJ. So we should see the Japanese yen weaken against the US dollar. Now the only thing that's really stopped that from happening much further is the fact that the Japanese yen's been used as safe haven flows with global uncertainty. But I am expecting this to rally up now. We've broken through this trend line at the top here. We've had a bit of a pullback to the previous area of support. Was resistance, now becomes support. So this should really be the catalyst for this to levy up. So if you're not in this trade already, then I'll probably be looking to get into that fairly early as soon as the markets open on Monday morning. Now the other one is the US dollar. Now we have had the US dollar pushed down. It pulled up quite a bit and showed rejection from the 113 area, but it didn't make a new low, and it did start to break back through the 112 area. Now I'm being a little bit cautious about this because I think it is due to bounce back a little bit. We've got the early on in the week, we've got employment claims, ISM manufacturing index coming out on the US dollar, which is expected to be slightly weaker. We've also got the other figures there coming out. We've got Fed Chair Yellen speaking. Not too sure about how that's gonna play a part, but we have got CB consumer confidence as well, which is also expected to come in slightly weaker. That's quite early in the week on Tuesday, and we've got FOMC Dudley speaking at 1:30 on Monday. So I do think we could see a bit more of a rally in this euro, and I think we could see it retest the 11350. Now I'm only gonna suggest this if we continue to break through this 112 area. If it stays below 112, if it keeps rejecting 112, which like it has done in these last two candles, then I will be looking for it to make a new low and possibly re-entering at the same price that I entered last week, around about 1155, and trading it down to the 11 area for a quick short profit. But we'll see what happens when the market opens. But this could, what I'm saying is, it could go either way. I am looking at possible rally on this early in the week, and then possibly it returning to the downside by the non-farm payroll. So just be aware about jumping into sells for this at the moment. If you are going to jump into a sell, I'd probably try and jump in as close to the 112 area as possible, so that then if it does make a new high above here around about 112, 112.11, 112.12, then you can pretty well much assume that you're in the trade going the wrong way, and you can get out pretty early with a very, very tight stop loss. Okay, so that's the euro and the US dollar yen. Other trades that I'm interested in, the New Zealand dollar, US dollar has pulled back quite considerably at the moment. We've got ANZ business confidence coming out on Wednesday next week at 1 a.m. If that disappoints, then we could see that New Zealand dollar push back down. This really has had a rally due to Fonterra milk auction prices going back up, or forecasted to go back up for 2016. So the bit of a relief rally there, but it has stopped around this sort of area of resistance, and it is starting to show signs of reversal. So I would be more comfortable with pulling back to the 6.4 level for a resell. But if the candlesticks start to develop and show here that we are in a reversal pattern, then I'll be happy to take it for a sell where it stands. So we'll see what happens when the market opens on that one as well. But long term, New Zealand dollar still much weaker than the US dollar. Swiss franc at the moment, not really interested in the Swiss franc. Reason being, the margin call on the margin, on the Swiss franc is very, very high due to what happened in January. So we're trying to avoid the Swiss franc trading against any pairs at the moment, unless you're going to trade very small lots on things like carry trades such as New Zealand dollar, Swiss franc. Really, that's about it. The US dollar CAD, I am expecting to rally back up. We had this breakthrough here. We had the breakthrough of the 133.50 area. It pulled back down below that. It's settling there at the moment, but you can see here I've got a little bit of analysis drawn on here, a dotted arrow there. If it does break back above that 133.50, then I would expect it to get back up to 134.50 or up to 134.50. But apart from that, there's no real catalyst on the calendar to drive that next week. The only things that we've got being driven are sort of US dollar, euro, possibly Aussie dollar, and New Zealand dollar, and the US dollar yen, with it due to come up to that monetary policy meeting in October. The pound at the moment is sat sort of in between support and resistance levels. It's started to reject this little point here at the moment, but this isn't the overall dropping price. I think once it broke through that 152 area, I think we're probably going to see this fall further, possibly down to 148. We'll just see what happens. Again, we're going to be looking at these candlestick patterns and see what happens with these in over the course of next week. Not jumping into any conclusions just yet. We need to start seeing how the price is going to open, with it being quite sort of low volume next week in terms of volatility. We could go either way. It could drift back up slowly, or it could continue to drift back down to around about the 148 level. 148 level is really where I would like to see this for a rebuy. Until then, I'm pretty much selling this on sentiment down to that sort of price at the moment. Okay, that's all for now. Thanks for watching, and I hope you can make some pips.